question 1500 from transaction. Now I will subtract 2500 minus 1500. I will get 1000 in debit size and credit size 1000. Let's back to the question or transaction number 2. The insurance policy for the year, she's mentioned here 1 month, only 1 month. Now the transaction 2, I put insurance expense and prepaid insurance. How I get the amount? I will go back to the question to take the amount of prepaid insurance. See here, prepaid insurance, the amount 4,200. I will over 12. Why over 12? Because 1 year I have 12 months. And they mention in question there is prepare the adjusting entries for month. So divided by 12. We'll get 350 in debit size and credit size 350. Let's go to the third transaction. 500 of unearned service revenue have earned at the end of the month. So transaction 3, I will put unearned service revenue and service revenue and credit size by 500 in debit side and credit size 500. Let's go in fourth transaction. Accrued salaries, there is accrued salaries mentioned 1,600. So I will go back in fourth transaction. I bought salaries expense and salaries payable 1,600 and debit size and credit size 1,600. Go back to 5 transaction. The equipment has a 5 years life and salvage value is 1,000. So go back to the straight line you have mentioned for the rules. For the equipments, I will take the amount for the equipment. So here mentioned the accounting, for the equipment 25,000. And salvage value, I will subtract salvage value 1,000 over 5 years. See? Number 5, transaction 5, I will put depreciation expense and equipment depreciation. So 2,500, it is the original cost, and 1,000, it is a salvage value, and 5, it is a useful life. At you have get 4,800. At we have to mention in the question, prepare the adjustment for 1 month. So I will multiply by 4,800 multiply by 1 over 12. 1 it is mean 1 month only, and 12 it is mean the month. Get 400 in debit size and credit size, it is 400. Let's see the last transaction. Perform service 3,500 during the month have been not been recorded. So I will go to prepare the general entries. I put account receivable in debit size and service revenue in credit size 3,500 and debit size and credit size 3,500. This is the trial balance of Umar Advertising Agency, and this is the transaction. Now, you have salary, first transaction, salaries expense, not paid. See, not paid. How to prepare the general entries for the first one for the accrued expense, for the salaries expense. First one, I put the salaries expense in debit size, and credit size, I put the salaries payable 800 in debit size and credit size 800. It is directly. No need to have calculation. Now, the second transaction, $750 of supplies have been used. No need to subtract from supplies any question. It is directly used. $750. So I will go to the solution for transaction 2. I put in debit size supplies expense and supplies. $750 in debit size and credit size $750. Let's go to the third transaction. Expire insurance for the period 400. Transaction 3, I put insurance expense and prepared insurance 400 in debit size and credit size 400. Let's go the fourth transaction. Depreciation to be charged. This is 10% per annual of original cost of equipment. The expected, there is a salvage value of 5,000. Umar advertising agency is using straight line. So I will take the original cost. It's not mentioned here in original cost in the question. I will take it in the trial balance. I will go back in the question to take the original cost for the equipment. This mentioned here 20,000. So 20,000 I will subtract it from. See, this is 20,000. It is the cost minus 5,000. It is a salvage value. We'll get 15,000. As he mentioned here in the question, there is a percentage 20% to 10%. So 15,000 multiplied 10% will get 1,500. So 1,500 in debit size and credit size 1,500. We'll go for the last transaction. 5. The date of note payable October 1, 2017. There is mentioned here 10% of annual interest, but not paid. So 1 October until December, how many months? October, November, December, October, November, December. There is have 3 months. So